Artificial intelligence is devouring electricity. Every new data center sucks up more power than entire cities. Utilities can't keep up, and the grid is already stretched thin. That's where Oklo steps in, a tiny nuclear startup promising to deliver power faster and cheaper than anyone else. Instead of waiting years for government projects or utility deals, Oklo wants to do it all themselves. Build the reactor, run it, and sell the power directly. If they pull this off, they could become the go-to energy source for the artificial intelligence revolution. But here's the catch. Oklo has no revenue, no binding contracts, and yet its stock keeps blasting higher. So today, we're breaking down the opportunity and the risks behind one of the boldest bets in clean energy. Here's what makes Oklo different. Most nuclear companies like NuScale or GE are basically equipment suppliers. They design reactors, but then they need utilities, regulators, and customers all to agree before a single watt of power ever gets delivered. That process can take years and sometimes decades. Oklo's pitch? Skip the middleman. They want to build the reactors, run them, and sell electricity directly to data centers, factories, or anyone who needs it. If a customer needs more power, Oklo can just add another small modular reactor on site. Fast, simple, scalable. And the timing looks perfect. Artificial intelligence data centers are exploding in size. Just one facility can use as much power as hundreds of thousands of homes. Traditional utilities can't build fast enough, and everyone wants clean energy. Nuclear checks both boxes. That's why Oklo has captured so much attention. Now here's the part investors need to pay attention to. Oklo today has zero revenue. They haven't locked in contracts because they are betting that electricity prices will rise. If power gets more expensive, they stand to make a lot more selling directly to customers. But that's a gamble. What if prices stay flat or customers find cheaper alternatives like renewables or natural gas? Oklo could be left waiting while costs pile up. Meanwhile, the stock has already taken off. The market cap keeps climbing as if Oklo's future success is guaranteed. Did you purchase Oklo stock? Let me know why in the comments. That means investors are paying upfront for growth that hasn't happened yet. If Oklo delivers, the upside could be huge, and we will dive into that shortly. But if they stumble, today's buyers could get crushed. Oklo's technology is fascinating. Small modular nuclear reactors powering data centers? That's huge. But here's the reality for investors. The price you pay matters more than the technology hype. Before we run the numbers real quick, consider chatting with me on Discord. I'd love to discuss stocks with you, and because this is a small channel, you will be able to directly access me. See the link in the description. Now, let's run the numbers assuming everything goes perfectly. Let's assume Oklo is able to deploy its full development pipeline of 14 gigawatts. Actually, I'll round that up and be extremely generous and give them 15 gigawatts. Let's say that they're able to deploy this all in 3 years, which would be insane. Here's what the revenue and profit could look like using conservative, base, and bullish pricing scenarios. We will give them a 15% profit margin as well, which is being extremely charitable. Even in the bullish scenario, that's only $2.25 billion in annual profit. If we apply a 25 times price to earnings multiple, Oklo will be worth $56.5 billion in 3 years. Discount that back at a rate of 12.5% to today, and you're at $28 billion. That's roughly a 40% upside if everything goes perfectly. Now, the bullish scenario assumes that Oklo will be able to charge the average industrial electricity rate of 85 megawatts plus a $25 government credit. This will allow it to receive $110 to $120 per megawatt hour. But consider natural gas, which most data centers actually use. This costs around 50 megawatt per hour. Sure, it can be volatile at times, but not enough companies won't take the risk to save costs. That makes the conservative scenario far more likely. If we take that $1.31 billion in profit and discount it back 3 years, you get a $23 billion valuation. The company is currently valued at about roughly $20 billion. That's basically fair valuation at this point. For the bullish upside to happen, Oklo would have to deploy all 15 gigawatts in 3 years, sign agreements at high energy prices, and avoid regulatory, operational, and technical delays. Considering Oklo hasn't signed any agreements yet, that's a massive risk to take. Oklo was a good gamble to take when it was cheap. When the company was trading at $3 to $5 billion market caps, you could take that gamble. I wish I had done my analysis earlier because I probably would have purchased the stock. Today, the upside just isn't there. I'm setting a price target if the market crashes though. I'm interested in the company at below a $10 billion valuation or about $60 a share. Oklo's technology is amazing. Small modular reactors powering data centers, that could change the energy game. But as an investor, you're not buying just the technology, you're buying valuation and execution risk. The numbers don't lie. Even in a bullish, extremely generous scenario, the upside from today's $20 billion valuation is only about 40%. And that assumes everything goes perfectly. We have laid out the risks already. Deployment speed, price risk, regulatory and technical hurdles, no signed agreements. That's too many things that need to go perfectly. It's exciting tech to watch, but as an investor, this is a case where hype doesn't pay the bills. You want upside, yes, but you also need reality. The reality is the upside now is limited and the risks are enormous. Thanks for watching and sticking with me to the end. I greatly appreciate it. Please like if you got any value from this. It helps me so much and I truly appreciate it. Thanks. Bye.